I'm going to show you how to potentially make thousands of dollars next week by selling options on popular stocks for earnings next week. So, of course, a lot of companies are reporting earnings, but we're going to be concentrating our money on four specific stocks. The first one is going to be Zoom, which reports earnings Monday after the market closes. And Zoom, it's been doing pretty bad the past year, especially due to this bear market conditions. A lot of the growth stocks, tech stocks specifically, have been selling off. But right now, I think that it's oversold at a point to where there's money to be made if the stock continues to be flat. So we're going to be going to trading options. We're going to be selling put, and we're going to be going over to the 4th March expiration. And what we can do is we can see there's lots and lots of premium to be made for Zoom for next week because volatility is going to be pretty high. And as we saw earlier, earnings is going to be right after Monday closes. So what we can do is we can do something like a 115 strike price for expiration date March 4th. And as we can see, we're receiving a premium of $700. This goes right to our buying power. And we could potentially have a 69% chance of profit. So it's a very, very high chance of profit. The odds are in our favor. And it's a win-win situation. If the stock drops below a 115, we just have to pick up 100 shares of the stock, and then we can go around and turn it to covered calls the next week if we do get assigned those shares. So that's going to be stock number one, Zoom. Lots and lots of premium to be made, $700. Next stock is going to be, of course, our beloved AMC. Lots and lots of premium is going to be made on this stock as well. And as we can see on our screen here, AMC stock is at $17. So we can go to the same expiration date, or if you want, you can drag it out a little bit. But the March 4th expiration date looks pretty good, and there's premium to be made. So what we can do is we can do a $15 cash cure put, where we can sell multiple of these, probably like five, and then we're going to be collecting a premium $155. Now this one, I really like this one because AMC's been on a roll lately, lots of upward momentum, and especially since this is an 81.72% chance of profit, we have very, very high chance of profit to make our money on this, and we're collecting a very high premium as well, about a 2% for next week, which is going to be pretty, pretty good for our accounts. And then next stock is going to be SOFI. SOFI, just like a lot of the other stocks, have been selling off, which is going to be a really good buying opportunity for us. It's pretty much back to where it was when I IPO'd back in late 2020. So honestly, very good pickup, and we can sell some options on this for next week and collect some really nice premium. Because as we said earlier, earning season means premiums are going to be pretty high. We can capitalize on this by collecting some really high premium with high chance of profits. As you can see, what we can do is we could either do a $10 cash here put, $9, anything you want. But you could do, we're going to be eyeballing this $9 strike right here for $28 premium. This is going to have a 78% chance of profit. And what we can do is we can sell multiple of these contracts. We could do another five, and then we're collecting another $140 for next week, straight to our buying power. And we can do that. We can do anything we want with that. Withdraw it, pay some bills, do whatever you want. So that's going to be strategy number three. Next stock and last stock on our list is going to be Lucid Motors, which actually reports earnings. Sorry, and it's not Lucid Motors, it's Lordstown Motors. So Lordstown, it's actually been doing pretty bad lately, as we can see here. But it's at the point where it's pretty much bottomed out around this $2-3 price point, and we can go ahead and sell some puts on it. Now, obviously, this is going to be pretty risky, so do this with some caution. And for this, we're going to be doing a $2 strike price expiration March 4th. And what we can do is we can sell a few of these. Like if you want, you can do like 20 of these. You're only putting down collateral of $4,000 because it's a $2 strike price. So what we're going to do, we can actually do 100 of these contracts, and we're going to put down a collateral of $20,000 and collecting a minimum credit of $300. So this is going to give us a nice chance of profit of 90% for next week. And if the stock doesn't tank 50%, we're basically making our money in full. Now, obviously, 20,000 collateral is a lot. So if you want, you can do like 50 contracts, and that's going to give you credit of $150 on a collateral of only $10,000. So these are going to be the 4 strategies for next week, collecting lots of nice premium for next week with very high and good probabilities of success, as well as the option to get assigned shares at a lower strike price. That's about it for this video. Thanks for watching.